Now on Bloomberg Intelligence, Munis in Focus.
Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's check in with Dan Close, head of municipals for Nuveen. He joins us from Chicago via that Zoom thing. Dan, we got a lot of crosswinds in this marketplace, geopolitical front and center over the last 6 to 7 weeks. What's it been like in the municipal bond market? How's that market been performing this year?
Yeah, it's kind of a tale of two cities so far. January, February were incredible for the muni bond market. Everything was going well, similar to most other markets. March, we had our worst month since September of 2023. March was. So we've now, that first or so week of April, gained a lot back. Munis are up just under 100 basis points on the year. It's doing about twice as well as the Bloomberg aggregate. So we're outpacing other fixed income, but gave a lot of performance back during the month of March.
Dan, the current administration has threatened to withhold federal funds from Democratic-led states and local governments that don't cooperate with federal authorities. How do you risk manage that?
Yeah, we've seen some of these threats. I'm here in Chicago. There's been some threats to stop funding for the CTA. We generally look for just longer term trends in our credits. Most of the federal funding that are in discussion here are very small portions of state and local government budgets. For instance, we see in states of Minnesota discussions of withholding funds. When you look at that in comparison to the $13 billion or so rainy day fund that Minnesota has and the funding that's at stake, it's still a very small portion, but we do take that into account in our credit analysis.
Dan, how's new issuance been this year so far? Because, boy, the municipal bond market had record years in 2024 and 25.
Yeah, last year, absolutely correct, $600 billion, and we're just seeing a lot more expensive projects coming online. We're not seeing back to the battle days pre-2008 of golf courses and ice rinks being financed. It's just, cost of doing business. It's, if you look at CPI, all urban consumer non-seasonally adjusted, beginning of COVID through the end of last year, that's up about 25%. The metric that we look at in our market is how much does it cost to pave 1 mile of road? And that's up about 62%. So the inflation we're seeing on these muni projects, the cost of steel and concrete and larger construction projects have gone up. So last year was a record at $600 billion. We anticipate we're going to be close to that. We saw a little bit of a drawback in March, but Nuveen's forecast for the balance of the year is that we get slightly above $600 billion, but it's not a number that particularly scares me. And I say that because there's going to be more bonds called, more bonds maturing, sinking funds tendered than new issue paper. So we're likely the only market in all of fixed income that is going to have a shrinking market or a shrinking asset class on a year-over-year basis.
Dan, issuance is ramping up. Fund flows are still a little bit uneven. Can you talk to us a little bit about the technicals in the muni bond market?
Yeah, so last year, total inflows, and this is both for ETFs and mutual funds, and ETFs have really come into the muni market in a big way, lagging a bit what we've seen on the corporate side for sure. But about $25 billion or so came in all flows in 2025. Through the first 3 months of 26, or the first quarter, we've already had more inflows in, so about $27 billion in. So that technical picture, I think looks very good. I've been, quite frankly, very surprised because that 6 weeks or so before taxes are due, we tend to see some of the most seasonal weakness. We went back, about 20 years or so, and that 6 weeks before individual investors actually cut their tax checks to the IRS, the muni market usually goes down about 30 basis points. And then that 6 weeks following, we tend to see that the muni market has a nice rebound up about 42 basis points. Heading into this tax season, given the inflows, given we've had about 19 weeks of 20 where we've seen flows coming into our market, the technical picture looks very good. I think the only things that I'm not really concerned about, but this is also the season where we tend to see a lot more deals coming online. But right now, I think the technicals are holding up very well, and I think the fundamentals are also a very good story right now for our market.
Dan, thanks so much for joining us. Really appreciate it. Dan Close, he's head of the municipals for Nuveen. And Nuveen has, I believe, the largest and longest running high-yield municipal bond fund in the industry. So that's pretty cool.
America is built with perseverance, resilience, and determination. And you can put that strength to work in your portfolio with BAM Mutual Insured Bonds. BAM protects municipal bond investments that finance the backbone of our country. You'll invest with the confidence of an added layer of security and guaranteed income you can count on. Invest with strength. Build a stronger tomorrow with BAM Insured Bonds.